Guatam Adani, the once unstoppable titan of Asia's fortunes, had the world in the palm of his hand as 2023 dawned, but his story is a fast-paced tale of calamity and chaos. Join me as we unravel the gripping story of how India's richest man lost a jaw-dropping $50 billion in the blink of an eye. It's a tale that'll have you gasping, chuckling, and contemplating just how precarious the life of a billionaire can be. First off, who is Guatam Adani and what does he do? Guatam Adani is a zestful 60-year-old Indian tycoon who took the business world by storm over 3 decades ago. Now, hold on to your seats as we dive into the mesmerizing tale of his rise to greatness. Believe it or not, Guatam Adani is a self-made man who dropped out of college and unleashed his entrepreneurial spirit like a force of nature. With unwavering determination, he transformed a mere idea into an awe-inspiring empire that stretches across infrastructure, logistics, energy production, and mining. It's like he harnessed the same audacity that John D. Rockefeller and Cornelius Vanderbilt wielded during America's glitzy Gilded Age in the 1800s. Now, here's something you might not have known. Guatam Adani even briefly outshone the likes of Jeff Bezos to snag the coveted title of the world's second wealthiest person. Now that's a feat worth raising an eyebrow or two. And let's not forget his close alliance with India's charismatic Prime Minister, Narendra Modi. But hey, let's not get ahead of ourselves. First, let's climb aboard the time machine and go back in time to when Guatam Adani's journey first began. It was 1988 when Adani founded Adani Exports, which eventually blossomed into the mighty Adani Enterprises we know today. This conglomerate encompasses half a dozen companies that play in major sectors of India's economy like energy, transportation, mining, and more. Oh, and did I mention they're responsible for managing multiple ports and airports? Well, they are. In the past couple of years, Adani's company shares have skyrocketed to unimaginable heights, leaving bystanders gawking in disbelief. It was as if the stars had aligned, sprinkling Adani's path with stardust and fortune. But little did anyone suspect that this captivating tale of triumph was about to take an unexpected turn, hurling Guatam Adani's colossal wealth into a mind-boggling nosedive. So, what led to Adani's rapid fall from grace? Well, less than a fortnight before his turbulent fall from grace, our self-made Indian industrialist was perched at the majestic throne of the 4th richest person on the planet, with a jaw-dropping fortune weighing in a staggering $120 billion. He outshone the likes of Bill Gates and Warren Buffett. Unfortunately, trouble lurked in the shadows in the form of a mischievous US-based investment firm called Hindenburg Research. Hindenburg, being the troublemaker they are, published a scathing report that accused the Adani Group of decades-long brazen stock manipulation and accounting fraud. And as you'd expect, the news was a freaking bombshell. Nobody ever wants to be accused of such crimes for obvious reasons. But for Adani, this wasn't a big issue. By then, Adani was already familiar with such accusations, so at first he appeared unfazed. You see, Adani's company shares skyrocketed to astronomical heights in a relatively short time. And of course, you know people. The apparent overnight success was met with a chorus of raised eyebrows and quizzical looks. Some even whispered about the possibility of manipulation. In fact, rumors circulated that much of the trading frenzy surrounding Adani Enterprises could be traced back to those sneaky tax haven holding companies. And there were also the whispers about Adani's involvement in an Indian stock market manipulation scheme. But as I said, everything still felt like just another day in Indian commerce until Adani's hefty debt load got revealed. Now the real party just got started. Investors were shaking in their boots, worrying about the financial stability of the empire built by our daring tycoon. Like watching a tightrope walker teetering on the edge while juggling bags of money, everyone wondered, will he stay balanced or will the weight of debt bring him crashing down? Now, let's not forget the piece de resistance, the Hindenburg report. This sly investment firm specializes in short selling. To short sell is to bet against a company's share price in hopes of watching it crumble. And this was what Hindenburg basically did to the Adani Group and its reports. When the report went public, the Adani Group fired back, calling the report a malicious combination of selective misinformation and waving it off like an annoying mosquito. But alas, the damage was done and investor fears couldn't be quelled. As the market chaos continued to unfold, the Adani Group unleashed an impressive counterattack, a meticulously detailed rebuttal spanning a whopping 400 pages. They accused the Hindenburg report of being a calculated attack on India itself, but alas, the battle of words couldn't save Adani from the clutches of financial turmoil. When the Adani Group vehemently denied any wrongdoing and claimed compliance with all local laws and regulations, Hindenburg stood tall, refusing to back down. They insisted that the Adani Group had failed to address a staggering 62 out of their 88 probing questions. Now, hold on to your hats, folks. We're about to uncover the nail-biting aftermath of the Adani Group's clash with Hindenburg Research. But before we dive into the market's reaction, don't forget to hit that subscribe button and turn on notifications for more exciting content. So, let's talk about the market's reaction to the whole Adani Enterprises roller coaster. When the much-anticipated Adani Enterprises share sale kicked off on January 25th, things didn't exactly explode like fireworks on New Year's Eve. In fact, the response was quite muted. Only a measly 3% of the shares had been subscribed by the end of the day, as retail investors seemed to keep their distance. Luckily for Adani, though, a cavalry arrived in the form of foreign institutional investors and corporate funds. On January 30th, Abu Dhabi's international holding company, with a member of the UAE royal family backing it, swooped in and dropped the cool $400 million into the share sale. Indian tycoons, Shahjan Jindal and Sonal Mittal, also joined the party in the nick of time, showing their confidence in Adani's empire. Still, in spite of these massive shows of solidarity, the Adani companies witnessed a whopping $108 billion loss from investors shorting their shares and pulling out their money. To grasp the lightning-fast downfall of Adani Enterprises within such a short span of time, let's delve into the day-to-day events that unfolded. Brace yourself. January 25th. As dawn breaks across Asia, Hindenburg Research drops a bombshell. They reveal their short position on Adani Group companies through US-traded bonds and non-Indian traded derivatives. Consequently, the market witnesses sharp losses in Adani-affiliated stocks, and overnight, Guatam Adani's net worth takes a $6 billion nosedive. January 26, a public holiday in India with the market temporarily on pause. January 27th, despite the ongoing stock sell-off in group companies, Adani Enterprises presses forward, opening subscriptions for its follow-on public offering worth $2.5 billion. But the storm persists, and the billionaire's net worth plummets further by a staggering $20.3 billion, leaving him with $92.7 billion. January 28th through 29. The weekend brings a heavyweight response from the Adani Group. In a comprehensive 413-page document, they fire back, warning Hindenburg of potential legal consequences. The Indian firm vehemently dismisses the accusations as a calculated attack on India and its institutions. However, Hindenburg swiftly retorts, labeling Adani Group's response as bloated and accusing it of brushing aside crucial allegations. January 30th. Adani Enterprises Group CFO, Jagshinder Singh, steps up to defend the group's integrity in an interview with CNBC TV18. In the interview, he stresses that the value of Adani Enterprises remains unchanged, despite the turbulence in share prices. Nevertheless, the group's companies continued to suffer losses, causing Adani's net worth to plummet by an additional $8 billion, resting at $84.5 billion. January 31st. Analysts' concerns prove futile as Adani Enterprises' $2.5 billion share sale garners full subscriptions on the final day. Despite the anxieties surrounding its fate, the offering seems to hold strong. February 1st. Surprise, surprise! Adani Enterprises makes an unexpected announcement revealing that it will not proceed with the follow-on public offer. The reason? The prevailing market volatility. And just like that, in just 1 week, the Indian billionaire extraordinaire, Guatam Adani, witnessed a jaw-dropping decline of over $34 billion in his net worth, according to the Bloomberg Billionaires Index. It was a whirlwind ride that left the financial world in awe. Now, let's tackle an important question that arises in this whole saga. Did Hindenburg have the public's best interest in mind when they released their reports? Well, let's cut to the chase. Hindenburg Research didn't embark on this 2-year investigation of the Adani Group simply because they were deeply concerned about informing the public about potential wrongdoings by an Indian conglomerate. No. Their motives were driven by profit. You see, Anderson, the founder of Hindenburg, is what we call a short seller. That means he stands to make money if the price of Adani Group company shares and bonds takes a tumble. And boy, did he make those prices fall with his report. All of that said, we still have one critical question left unanswered in all of this. What are the implications of the Adani fallout on the Indian economy? This is a hugely important question because we're not just talking about any ordinary company here. Adani Group is a major player in India, and Guatam Adani himself is one of the wealthiest individuals in the world. So if this company takes a nosedive, it's bound to have some serious ripple effects on the Indian economy. One of the immediate concerns is the potential damage to foreign investor confidence. You see, India has been on the rise, with people envisioning a bright future. But this whole Adani saga has the power to cast doubt on that very narrative. It raises a critical question. How strong is this economic story if a single report can have such a profound impact on one of the nation's largest companies? And then, of course, there's also the fact that the Adani Group plays a significant role in India's infrastructure development. So if this conglomerate was to vanish or suffer a severe blow, it wouldn't just be a matter of corporate governance headaches. It would turn into a full-blown nation-building dilemma for India. Now, I don't mean to paint a gloomy picture, but I think it's crucial to acknowledge the potential consequences of the Adani fallout. What do you think about this? Let me know down in the comments.